Good morning. Welcome to Mornings with Michael for information and educational purposes only. This is a weekend edition. So how to become a better investor? And what about others? Well, the way to become a better investor is to remain flexible, remain open, and continually learning. Continuous and never-ending improvement is KNI, and that is one of the keys to be a better investor. So here we are with Bitcoin. To start out, Bitcoin has been selling off from 59,000, just cannot get above 60,000. We'll see how long this trading range lasts. So what about losses? Should you worry about taking losses? No, you shouldn't worry about making mistakes or taking losses, because that's how you learn. And continuous learning, read many books, and if you meet somebody wiser than you, you should be quiet and open up your notebook and start to take notes. So those are some of the things that I've learned in a number of years of investing. So let us, we're going to take a look at some IPOs a little later after our PowerPoint presentation. But first, if you're at all nervous about a hard landing, this is something you may want to look at. This annuity has beat index investing by 5% per year. Does not go down when the market goes down, but goes up when the market goes up. Just keeps going up the stairs. And currently there are bonuses from 10 to 45% out there. If you want to learn more about that, feel free to check in with me with a comment. Let us go over to our heat map. This is how we ended the week. We had 4 different companies that were doing well in energy when energy was down. Basic materials was leading. We showed that was the ETF of the day on Friday. Industrials, farm equipment, and other building management stocks were up. Financials were doing well. Wells Fargo was up close to 2% on Friday. ServiceNow was leading in the software sector. Semiconductors, there's a few of those that were up. NVIDIA kind of bounced a little bit. And that is how we left the week. We're going to go take a look at our charts. We'll look at this a little later. This is Lineage, a new IPO. A recent IPO. The metals market, this is the dollar. The dollar continues to move up, bouncing off of the bottoms down here. Our pen, there we go. Our pen was not cooperating. Take a look at the metals market. It's trending upwards. There's a few metals and building materials as well. We got this breakout in building materials on Friday that we kind of highlighted. So once, twice, 3 times, and the 4th time was a magic charm. Take a look at copper. Copper is up slightly. And FCX is in the building materials, sold off and bounced back. Tech did about the same. Here is a copper mining company. Off of the green 20-day moving average. We got a double bottom here formation. Buy point in the double bottom is the middle of the W, which is right over here. Early buyers sometimes buy off of the tops here. This is Southern Copper. Still remains under most of the moving averages. Uranium is trying to hit a bottom, came up here and then sold off. Not sure if this is a lower base with a handle, but we'll just continue to check on that. Denison Mines. Got up to 247 and then sold off. We'll see if it can get above the 50-day moving average. This red line right here is the 50-day moving average. That's kind of where we left off. I'm going to head to my PowerPoint presentation right now. Our word of the day is discernment. Discernment, the faculty of discerning, having discrimination, acuteness of judgment, and understanding. The act of instant of discerning. So we'll take a look at that as we get further into our PowerPoint presentation. So this is from Benzinga in the middle of August. Laugh all you want, Robert Kiyosaki. Rich Dad, Poor Dad warns millions of 401ks and IRAs could be toast. And then we found this news article, the brutal rout in stocks earlier in August was a dress rehearsal for what's to come, JP Morgan says. So this is a lot of the big cap tech. This is on Thinkorswim. You just put a ticker symbol and a plus sign, you can bring up and make your own index. This is NVIDIA, Microsoft, Apple, Meta, Facebook, Google, Berkshire Hathaway, Eli Lilly, Amazon, JP Morgan, and Broadcom. And this is exhibiting a head and shoulders top. This is a bearish warning signal. So we'll see if this part of the shoulder comes down and breaks through the resistance. This is currently providing support, and if it comes down through it, it'll turn to resistance. And a lot of times stocks or indexes come up to this resistance and then turn lower. And that's how bearish traders use that as a symbol for themselves. So this is NVIDIA. It's exhibiting what they call a triple top, bearish signal. Consider NVIDIA as a triple top with a short setup, parabolic sell signal trigger. It did, like we did say, it did bounce back, whether it just bounced back to fill this gap and then turn to the trend that it has been exhibiting lately. The other downside for NVIDIA is it's shaping what we call the V-shaped pattern. V-shaped patterns frequently fail. And the other problem with NVIDIA, volume has been low, and it's something they call wedging. Wedging is when a stock or an index goes up low volume. Once again, this is a bearish signal. So there we go. Here's the Dow Jones Industrial Average. What do we got over here? We got a hanging man. What happened the last time we had a hanging man was right over here. Pull back to the moving average and then bounce back. We've got a hanging man here. It didn't go down right away, but a couple of days later, it did go down for a time. So we got a hanging man over here, went down one day and up. So we got a number of hanging men signals. What is also negative on this chart here? Well, the other thing is on the move up, the volume was lower. You want to see higher volume than on the selling. When it's moving down, the stochastic signal is moving down, and we're just kind of waiting for corroboration in the commodity channel index signal as well. So there we have Dow Jones. Here's the IWM, or the small cap index. Target for the Dow Jones, so we bring that up. Here we go, the target for the Dow Jones on a pullback is 400.52, and for the small cap index is 206.47. So what do we got here? We've got a gap here, so it has filled this gap. Now we've got a gap down here lower, 80% of gaps fill, and then they return to our previous direction, our trend. So we got a hanging man once again over here. All the indexes are showing hanging man candlestick patterns. We got a lower volume on the volume, got a trend down on the stochastics, and we got a bend here on the CCI. So those are all bearish indicators. Here we have the NASDAQ. Once again, we got a hanging man over here. And our target on the NASDAQ is 461.67. And we got a gap over here. It is a ways above the trend line. We got a lower volume on the trend here. It's below the 2 bearish days. Heading down on the stochastics. I guess we went ahead further. We're going to reshape this. Go back to where we were. Here's the NASDAQ again. Oh, that's a wrong symbol. Got too far ahead of myself. Here's the NASDAQ. And we got it's trending down on this commodity channel index as well. So here's the S&P 500. We've got a hanging man symbol again. Target on the S&P 500 is 543.88. Got near its highs up here at 563.68. We did have a higher volume here, but sometimes that does happen on the hanging man symbol. We get the shorts kind of covering, so that brings in the higher volume. Got a trend down crossing the slow line. The fast line is closing the slow line. And we got a slight trend down on the commodities channel index as well. And we got a big gap above the moving average. So those are all bearish kind of indicators. Now we move over to the VIX. The VIX hit this on the Japan yen carry. And this was really shot above our target. Our target was 41.88, kind of cleared that. Our current target is to go up to 23.89. Got a pullback here. So if the S&P 500 pulls back, the VIX or volatility index is going to head higher. It's going to head above the moving average right over here at 23.89. So this is pretty close to the bottom, to the zero, is actually below the zero line. And then this is heading down as well. So don't know exactly on the timing, but those are the targets. Now this is on a monthly basis. The Dow Jones, once again, we got stopped out here. No, that's S&P 500. Let's go back to the Dow Jones. Here's the Dow Jones hanging man symbol on the month-end basis. Volume, it looks like it's starting to go down lower. This is still heading up, but I think it's going to turn down. This is the stochastics, and the CCI is already down. And this is a small cap. You see it's high above the moving average. This is a bearish hanging man symbol. Got a lower volume on the selling here. It was up most of the day and then sold towards the end. Towards the end of the month, I guess you would see, since this is a monthly number. We got a hook here on the stochastics, and it's already turned down on the commodities channel index. So what happened last time we had a hanging man? Look at this one right over here. It trended down for a long time before it came back up. This is a QQQ. This is a hanging man back over here. So you can see that it did trend down for 2 weeks before it started moving back up again. So this is another hanging man. It's far above the moving averages. Volume is a little higher, but that may be shorts covering again. It did get up close to our target, and now it is turning tail. We got to move down on the stochastics and a move down on the CCI as well. Moving on to the S&P 500, we've got the hanging man here, hit the upside target. What happened last time with hanging man, same thing as NASDAQ, headed down for 2 more weeks before it headed up again. Got a little higher volume like we saw on the previous one, but that may be bearish covering. And it's starting to hinge on the stochastics, and it is moving down on the commodities channel index. So discernment. What's our word of the day? Last Friday, Jerome Powell noted that the timing and pace of cuts will depend on incoming data. But what happens if you don't believe that data? Well, that's where your discernment should come in. Now, we've had downward data revisions. U.S. retail sales have been revised down in 7 out of the last 9 months. This year alone, 4 months of retail sales have been adjusted down by 0.2 to 0.3%. Now, everybody was expecting the sales numbers to come down, but they exploded higher. But what does that mean if you revise them on a Friday night when nobody was paying attention anyway? Down 7 out of 9 months, shows that can't really depend the data where that's the data you depend on to make your trades or your moves. So this is what is happening here. Same thing has happened with the employment numbers, where they have overstated employment by 818,000 for the year. It seems like it's manipulation of some sort to keep the current administration in power. That's what it seems to a few of the people out there. So that's kind of the chatter that is going on. Dollar General, now if sales in the economy are so good, retail sales are so good, why is Dollar General crashing 32% in a record cut on sales outlook? So everything is turning down on Dollar General. So what happens when the Fed pivots in history? Well, in the general financial crisis, there was a 50.1% crash. The Fed pivoted in August, and the S&P didn't hit bottom until February of 2009, 18 months later. The dot-com bubble. The Fed pivoted December of 2000, stock market crashed 38.3%. Now the Gulf War recession, well, they pivoted in 1989, but in 1987, they already had the big crash, and this went down another 4.4% after they pivoted. And the bottom didn't hit for another 16 months. We had the double dip recession in 1981, which lasted for 13 months after the Fed pivot, went down 16.5, the 1973 recession. After the Fed pivoted, it went down 41.3%. So that's a little bit of history. Now, the majority of the decline in these bear markets occurred after the Fed's pivot. 1969, here's 36%, 73 down 48%, 81 down 27%, 2000 down 51%, 2007 down 58%, 2019 35%. And what happens after the Fed pivots now in September? That's to be seen later. Now, everybody's talking about the great housing numbers. Now, there's blowout numbers on new home sales, but pending home sales plummet. They're down 5.5%. Now, this may be good for new home buyers, but it may not be good for the industry. So that is what's currently happening there. This was on Game of Trades, which you can find on Twitter or X. Buying conditions in the U.S. housing market have collapsed, now reaching levels only seen 2 times since 1960, 1974, and 1981. Both of them ended in a recession. So you can just see U.S. housing market, existing home sales has collapsed down to here. And trucking employment has been falling aggressively. This has been a precursor to recession since 1991. See, employment in trucking industry is falling. Try to recover and turn again. This is year-over-year changes in truck transportation and private sector employment. I didn't bring this up on the PowerPoint. I'm just going to pause for a second so I can bring this to everybody's attention. So this is where we currently are. We have a wall of worry, Fed rate cuts. Will there be an emergency meeting to cut rates? Recession fears, hard landing, soft landing. We got 2 wars going on, the yen carry trade, the presidential election, and inflation. Well, with this wall of worry, this is how I think market surge for these 2 charts and how we kind of work on this. How to handle the news. When news of consequence hits the street about the U.S. economy, our government, foreign countries, or international events, the capable tape sleuths are sometimes less concerned with whether the news is good or bad than they are analyzing the news effect on the market, according to the founder, William J. O'Neill. Trend lines over headlines. But let me also put this out there, that we are heading into the worst season in the market. I know it's a presidential year and there's never been a down market in a presidential year, but September and October are always the worst times of the year for the market. And it is usually when there's a Black Monday or a big downturn in the market. So it is definitely a time to be careful, and risk management is one of the most important things. And one way to go is never to let any single investment in your portfolio to be down more than 1%. So that is the story there. Now let's head over to our charts. We're just going to take a look at what's under the S&P 500. XLF is definitely breaking out. So it seems a lot of money is moving into financials. XLC, still kind of working on a base. Got a double bottom here. Needs to clear this double bottom. Would be 8802 would be the pivot area or breakout from this area. This is where Meta, which is working on a cup with a handle formation. The buy point for Meta is 542.91. It has peeked its head up here once and then sold off. Google is having some problems with the story about breaking up Google on any trust concerns. So that is why Google is down. The big one in this area is AT&T. Real estate looks like it's continuing its breakout, moved into the pivot, and just keeps on moving on up. Next, we have XLU. Trying to clear the pivot here. We have software. We've looked at ServiceNow. This looks like a V-shaped recovery. So the buy point on this one would be 89.07. 10 cents over the pivot. Technology, working on a cup with a handle. Infrastructure, trying to get back to the pivot area. Biotech, with a lower rate environment, biotech starting to look favorable. These are the two biotech ETFs. Here's our semiconductor ETF, working on a cup with a handle. Energy, it's trying to bounce back here. Here's oil prices, which really fell. Here are the stocks in the energy area that seem to be doing the best as of Friday, all popping up. So we continue on. We looked at metals and mining. There's a home builders bouncing back. Transportation. Healthcare has cleared the pivot. Consumer staples trying to clear the pivot. This one is where Tesla and Amazon reside. Looks like we got a weird shaped double bottom here. It's trying to bounce back. There is one that we've been trading. Had a huge move here, and now it's trying to work on the right side of its base. We'll just stay tuned on that one. Move to the banking sector, S&P regional banks. This one, regional banks looks like they tried to clear over here, sold off to the 50-day moving average, and now they've cleared the pivot area. Here's the Chinese stocks, which seem to be under all these major moving averages. So that is the story there. Let us now move on to the IPOs we were talking about. Just going to start off with, this is A-Lab. I'm doing a little research on Yahoo Finance. A lot of people are predicting this to double within a year. So I'll keep watching that. It did nibble at this when it broke above the 20-day moving average. Small amount, but it did sell off pretty hard over here. So we'll continue to monitor that. I have that number 1 on my list, so we'll get back to the area I wanted to concentrate on. PACs. Continue to like this one. Triple B Foods. Mexican food distributor chain. Bowhead, which we currently have in our portfolio, broke out of the pivot, continues up, did get pretty close to the profit zone up here. So the idea is to take your profits 20 to 25% and take your losses between 2 and 8%. If you do that, you'll have a profitable business. We got Life 360, broke out over here. And there's our pen, broke out over here. And it's a little bit extended at the moment. Grail, Still working on the right side of the base. It's no longer an IPO base, so it would be a regular institutional base. If it does break out, this is an aerospace area, lower holdings. This was kind of bouncing all around, and then it really took off. So I'd wait for this to set up again. It may be setting up again for another run. Their earnings came in at pretty close to 1,000% increase. Merrick's Group came into a regular base here. This was the IPO base, broke out over here, pulled back, and now this is the institutional base. Looks like a lopsided double bottom here. This being middle of the W, and it broke out right over here. So I continue to watch this United Kingdom Financial Services Company. This is in the auto area. This is the IPO base. IPO bases are like 16 to 25 days in length. Got into the pivot area here, pull back a little bit, and then just continue to run all the way up here. This is Tempest AI, AI in the medical field, intelligent diagnostics through the practical application of artificial intelligence in healthcare. Here's the IPO base. Kind of cleared right over here. Had a pullback on their earnings. And then it just took off like a rocket. And now it looks like it's setting up for another base. You could put this on your watch list. This is one that we're currently trading, OneStream. Here's the IPO base. So we can take 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. And on the 18th day, it breaks out. So 16 to 25 days. On the 18th day, it clears it, and it just continues on up. OneStream, AI-enabled, extensive digital finance cloud software platform. Ardent Health Partners. We got our IPO base right over here. Their earnings came out, increased 26%, took off, went to the pivot area, and it continues on up right here. I'd wait possibly for another base setup, but definitely something for the watch list. This one is kind of extended personal and commercial insurance in the United States. This is one we traded earlier in the year. You can see it had an IPO over here and a big double bottom. 3083 was the top. That's where you buy, and pulls back below the 20-day and then bounces and really jumped up on its earnings, even though they were down 14% year over year quarter. So this is Lineage. This is real estate investment trust that invests in global temperature controlled warehouse with modern network of properties. So it is still on an IPO base here. It's 22 days. So it may or may not break out of this base. May have to go into the institutional phase, first stage of institutional phase, but it's definitely something to keep on your watch list. Land Bridge Land Bridge company engages in ownership of land that is used for energy development and production. Broke out of the IPO base and went into the profit zone, and now it's pulled back. We'll just see if it sets up another base here for the institutional first stage base. Rubric. So Rubric did not really break out of an IPO base. So they are just consolidating. This company provides cloud management, security platform, helps enterprises against cyber attacks. Was up 3.11%. What you could do on this one, just take your pen and draw over the tops. That could be one early entry, or you could draw over the tops like right in here, or you could go right through here where most of the price action is going. So if it was able to clear any of these, that might be an early entry for you. Put on a small amount and just see where it goes. In this last one, we're going to take a look at. We've got a little blockage in front of us, but this is Comfort Systems. Using AI for ventilation, air conditioning services. It's been bouncing around here. Has been getting some pretty good volume. Got some pretty good volume here. So I'd watch this. It's trying to get into the pivot area. There was one last one I really like to keep my eye on is Reddit. This is the IPO area. Didn't really clear anything here. So it's kind of working on the first stage base. You draw your pen right over the tops here. I would definitely wait for it to clear the 50-day moving average right here, but it is definitely something on your watch list. And that is our weekend update with Mornings with Michael for information and educational purposes only. Continue to go out there, work on your goals and your activities. Continue to amaze yourself and others around you. Hope everybody has a great weekend, great Sunday, and we'll catch you on Tuesday since the markets are closed on Monday.